implementation of a corporate tax rate in India for digital companies with presence in multiple countries has been tricky. From April 1st, 2020, foreign digital companies in India were required to pay an equalisation levy of 2% on e-commerce transactions here. The companies were given a deadline of July 7th to pay the levy. Since the introduction of equalisation levy or Google tax in 2016, India has collected over Rs 2,600 crore in such taxes. The tax applies to e-commerce transactions by non-resident digital companies in India, such as Amazon. The tax also applies to advertisement revenue earned overseas if those ads targets customers in India. Companies like Google, Adobe, Uber, Udemy will come under the purview of the tax. Previously, American digital companies like Amazon and Netflix could forego paying tax in India as they lacked the permanent establishment status, despite having a significant level of economic activity in the country. At first, the tax was applied only to revenue from online advertisements, but the scope of the equalisation levy was widened in February 2020. The problem of multinational corporations avoiding tax by strategically shifting profits from a higher to a lower tax jurisdiction or tax haven has always been a problem. This led to little or no corporate tax payment in India by these offshore e-commerce platforms. MNCs may also enjoy an unfair advantage over local businesses due to the option to cherry-pick tax havens. In the first quarter of 2020-21, Rs 216 crore was collected from the equalisation levy. But the US has launched an investigation into digital services tax proposed or imposed on it by various countries, including India. Far from targeting any US company or companies, the purpose of the equalisation levy is to ensure greater competitiveness, fairness, reasonableness, and exercise the ability of governments to tax businesses that have a close nexus with the Indian market through their digital operations. Is the purpose of the digital tax as per the response by the Indian government to the US Trade Representative. A lobby group representing US technology giants had urged New Delhi to defer the move. But a digital tax on foreign companies aims to stop escape from the country's tax system when there is a significant local client base. The US-India Strategic Partnership Forum has argued that the tax was riddled with various ambiguities and interpretational concerns. Finance Minister Nirmala Sitharaman at the third G20 finance ministers and central bank governors had said a census-based solution on the issue should be simple and inclusive based on a robust economic impact assessment. But if digital service providers decide to pass on the tax to consumers, it may increase existing prices, which can make some digital services less attractive. Meanwhile, India is among the 10 nations facing US investigations to assess whether the levies discriminate against American technology majors.